The Securities and Futures Commission of Hong Kong, SFC, has slammed a fine of HK 3.2 million on CES Capital International for regulatory violations. According to the Commission, CES Capital failed to discharge its duties as an investment manager of two funds from February 2015 to July 2017. Based on the report, CESHK failed to carry out enough due diligence and did not monitor the fund's underlying investments. Additionally, the company failed to implement enough risk management measures that could manage the fund's risks effectively. The regulator also accused the company of not carrying out adequate monitoring of the funds and the investments, which were also not maintained properly. CESHK has agreed to pay the fine but did not deny or accept the allegation. Practically, CESHK did not invest and manage the fund's assets and investments on a discretional basis, which is the basic requirement of the SFC. Instead, the fund's directors were given jurisdiction regarding when to invest it, but based on the investment goals stated in the private placement memorandum, the company was responsible for ensuring that the fund's assets were invested properly in UCs. The regulator also stated that CESHK could not produce any records of the regular meetings the company has claimed to be having with the Asset Management Department. CESHK only set out some general market views or data without following it up with an explanation or analysis of their impact on the funds. Recently, the Commission charged China Everbright Securities, HK Limited and fined the company HKD 3.8 million for compliance failure. The firm did not comply with counter-terrorist and anti-money laundering financing regulatory requirements. Based on the note, CESL did not implement effective and adequate systems to guard against or mitigate the risk of terrorist financing and money laundering associated with third-party deposits. The regulator said the offense was committed between January 2015 and February 2017. As a result, CESL has been fined for such a violation. SFC has been very active in the industry, offering protection to investors through sanctions against entities that fail to meet compliance standards. The Commission has intensified efforts this year as it plans to make the market safer and more conducive for investors.